Welcome to another episode of the Kinvestor Report, where we sit down with analysts and industry experts to discuss the latest developments in the junior mining, commodities, and small cap stock market. I'm your host, Arlen Hanson. As always, please be aware of our disclaimer in the description below that no part of this interview should be taken as investment advice and that Kin Communications may or may not be compensated by any of the companies discussed in today's interview. Today, I'm joined by Jordan Roy-Byrne, editor and publisher of TheDailyGold.com and The Daily Gold Premium, a premium publication emphasizing market timing and stock selection for precious metals investors. He's got over 25 years of investing experience and started TheDailyGold.com in 2009, bringing his readers high-quality junior companies with big potential. In 2019, he published The Coming New Bull Market in Gold, Why Precious Metals Investments Will Flourish in the 20s and 30s, containing all his best research on gold and lays out what you can expect from the economy, capital markets, precious metals over the next 10 to 15 years. And yeah, we look forward to talking to Jordan here. And obviously we love gold. We love making money. So thought we'd sit down with Jordan, who we all know loves gold. And he's got a great track record of making money for subscribers. So welcome, Jordan. Thanks for joining us on the show today. How you doing?
I'm great, Arlen. Thanks for having me. How are you?
Yeah, not too bad. Well, we're getting some sun on the West Coast. I know that you're in Seattle. So hopefully that's a good start to our summer here. Jordan, gold, silver, yes. Where are we in this commodities market right now? You've been following this for years. You got a ton of active subscribers. You've made a lot of money for your subscribers. Are we at the beginning of the cycle right now? Like, where's your head at on that?
It's Arlen. We're in a very, very unique spot because historically, if you look at gold and hard assets, they perform the best after the S&P falls into a secular bear market. It's still in a secular bull market. But we have seen, I mean, you look at equal weighted commodity prices, a couple of years ago, an equal weighted basket made a new all-time high, broke out to a new all-time high. Earlier this year, gold broke out to a new all-time high. So and I should say, when we're looking at secular trends, there is some overlap. There was some overlap in the 30s and 40s, but also in the 60s, where, you look at some commodities, they were inching higher in the 60s. You couldn't buy gold, but you could buy gold stocks. The gold stocks in 1964 had this massive breakout from I think it was like a 28 or 30-year base. And so the gold stocks performed really, really well from 1964 to 1968. If you look at the S&P, it did not fall into a secular bear until I think the end of 1968. Now, one demarcation line I use for the S&P falling into a secular bear is it loses its 40-month moving average. If you look at 1982 to 2000, you look at recently, you look at the 40s and 50s and into the 60s, for the majority of those periods, the 40-month moving average is a really good demarcation line. And usually when it falls below it and stays below it, that is a signal of a new secular trend, or at least a signal of the stock market falling into a secular bear. And so the stock market is still in a secular bull. And so I've been harping on this the last 2, 3, 4, 5 years. And so I was a little surprised that gold was able to break out earlier this year. But if you look at gold, if you look at a ratio, gold against the S&P 500, it's been trending down over the last 7 or 8 years. It has lower lows, and yet gold has been able to continue to trend higher. Of course, the stocks haven't done that well. I mean, silver until recently hadn't done that well. So it's a bit of a conundrum. I mean, I do point to the mid to late 1960s as kind of that historically, if we're looking at the way markets are trading and their long-term position, it's by far the best comparison. Another thing is the bond market fell into a secular bear in 1965, and it fell into a secular bear a couple of years ago, based on what I'm looking at. So I mean, that's another similarity to the mid to late 1960s. So I know it's a really long answer, but there's a lot of nuance that goes into it. And so, I mean, I'm extremely bullish on gold, but we're not going to have that big move until you see the S&P fall into a bear market, until we see the next downturn. So that's the reality. That is the key thing for gold, and secondarily silver. Like, I don't think we're going to see gold get to 3,000 with the S&P is continuing to make higher highs.
And do you think it's because we need that rotation of capital from the S&P and these generalists actually buying gold and gold stocks to get that momentum?
Yes, absolutely.
Yeah.
And that because what happens is when the S&P falls into a secular bear, that is when a lot of generalist money abandons stocks and starts moving into gold. And it doesn't mean that the stock market won't rally and come back to some degree after there's a downturn. Like it doesn't mean the stock market is going to go straight down for the next 15 or 20 years. It's just we need that break where they break the moving average, and it's clear that the stock market is in a new secular bear. And so gold has been able to do well. You have the central bank buying. Of course, you had the bond market broke a couple years ago, so that helped gold a lot in the last few years. But the stock market is still the big one. I mean, if and when we get that, that's when you're going to see gold go vertical, because we are seeing money come in from the other areas, but there's still too much money, generalist money that's going into stocks and all the things that correlate with stocks.
Yeah, and that generalist money will eventually, or we all hope, flows back into these junior stocks, and that generalist capital coming into these gold stocks is what needs for that new flood of capital come and make these stocks make new highs again too, right? So yeah, it's gonna be interesting times. So your premium subscription letter really focuses a lot on stock picks and analyzing projects and teams and things like that. And I know you save your names for your premium subscribers, as you should, because it's a valuable service. But like break down like your investment thesis, how you look at these companies from start to finish. Are you looking at junior explore codes? Are you looking at near-term developers? Or like where's your sweet spot right now?
Sweet spot for me is probably the junior producers. And so I'm looking for, well, the first thing I'm looking for, and I changed this a year or so ago, where I got more religion on really doing better company analysis, because I think a lot of amateurs that come into this space, like they focus way too much on the metals prices going up and then not enough on the companies. And so that's something I've been harping on, is that, I mean, even though I do technical analysis, but I do it at a macro level. And so I spend, I do interviews like these, and I do, my own podcasts. And it's fun to listen to people predict the macro, but let's be honest, like all the experts have been completely wrong the last like 3 or 4 years. I mean, so many people have been talking about a recession, and yeah. And so,
last 100 years.
Yeah. And I'm saying, so the average person or the amateur that comes into this space, they get a little too focused on that and trying to time everything. And then they don't spend enough time researching the companies and following the companies. And so it's something I've learned, and I'm not trying to, make a pejorative and say amateurs, because I really thought that way probably until a year ago. I was a little more obsessed with trying to pick every turn and, okay, which companies are going to go up 10x or 20x when gold goes up. I mean, hold that thought and really focus on the companies and focus on, okay, what will do well in a flat market? If we can find something that will do well in a flat market over the next year or two, well, if we get into a bull market, which we're kind of sort of in, but not yet in real terms, I would say, that's going to amplify your gains. And then money is going to go into these stocks first and foremost. And so we have seen some of that in the last, 6 or 9 months or so, since the last bottom in October 2022 or September 2022. Coming back to the companies, I like growth-oriented producers. I do like, a certain developer. If the developer is not going to build the project, then I want it to be like a decent project, but the value is so good because the stock is completely bombed out, that type of thing. But my bread and butter, I would say, is like developers that are going to build the mine, and maybe the project or the mine has expansion potential down the road. Also junior producers that can really grow production over the next 2, 3, 4 years. So that to me, like I have a list, the top 10 or top 12, and most of the, like I think probably 10 of those fit into that category, where they're a developer that's going to build the mine, or they're already a producer and they have growth potential.
Yeah, I liked how you talked about like the mistakes that some of these early investors make about just assuming metal prices means higher stock prices, right? One question I sometimes throw at these junior mining companies is like, oh, do you have a business model?
Yeah.
And you can guess how many of them say no, right? And it's like, okay, well, maybe that's something to think about, whether I want to actually put money into this company that, I'm putting faith in management to manage properly. Right. So yeah, there's a lot of homework, a lot of due diligence that these, investors can do. Like what are some of the other questions that they should be asking these management teams, do you think? Like when you're looking at these things, like besides the assets, and what are some key questions that you need to consider, or what are some red flags that you're like, okay, I'll never invest in you because of this?
I mean, I would say ask them, what do you think your value proposition is? Like, why should I buy your stock versus, all the other companies out here? Like, what's the downside? Like, what happens if you can't execute? I mean, it's just kind of basic questions like that. I don't think you need to be like a real expert on geology or things like that. I mean, I know there's like real science that goes into it, but um, it's kind of like you don't want to get into a situation where you're really taking their word for it. That, oh, this guy's honest or I like him.
Yeah,
Like
yeah.
you just, talk to someone and ask quite a few questions, and
Hmm.
then you can kind of get a sense for, is this something that has a chance, or is this guy mostly a bullshitter? Because
Hmm.
there are a lot of companies that are just hoping like that, okay, we're getting, we got everything ready, like the metals prices are going to go up and we're going to do really well. And that will probably happen to a lot of companies, but investors have to be smart. They have to have a plan. And if things skyrocket, they have to take some profits. So and I would also say, like, you have it's like it's a shameless self-promotion, but it doesn't necessarily have to be me, but like find a few newsletter writers that you can trust and who will answer your questions. Like you can, hey, I'm looking at the stock. What do you think? If you can bounce it off two or three newsletter writers that you trust, like that is really going to go like a really, really long way. It's another thing I feel amateurs, and I mean, I understand this because I kind of felt this way like 5 or 10 years ago. Like, oh, I'm not going to subscribe to any newsletter. Like, I don't want to waste money on newsletters, but that can be a really helpful investment
It
if
can be.
you
Yeah,
find
it
if you
can be.
find a couple. I'm not saying you have to pick mine or pick 10, but find a couple people that you can really trust and ask them their opinion, because they know that they have more experience, they have probably more knowledge than you do.
Yeah.
And last thing I would say is try and focus on like um a small amount of stocks. Like one problem is people tend to have for a portfolio of like way too many
A
names. Like
hundred
you
names.
can, yeah, I mean, you can find like 5 or 10 companies that you really like or you're just going to follow, and you could become an expert on those, like more than someone like me or
Yeah, fair enough.
another newsletter writer.
Yeah.
So that's important.
Yeah, yeah, that's fair. Yeah, and I like also going back to like subscribing to newsletter writer, like some of these guys get access to the management teams for longer periods of times, and they do get to spend time building those relationships with management and building that trust, and they do get access for the property visits, right? And I think they can bring a lot of value. Like Joe Mazandar, like I think he's fantastic. The Coffin, the Coffin awesome guys, right? And I think they bring a lot of value to the subscribers out there. And hey, they pick up something early and give you, recommendation on it early. They can pay 100 times X their what it costs you to be subscribed for the year. Just right. So I'm an advocate, brother.
Yeah.
I'm on your team here.
Absolutely. And another thing I would say is also, specific newsletter writers have a different expertise. Like I'm not an
Yeah.
expert. I mean, obviously I've been in this world investing in it for, a little more than 20 years. So I know a little bit about exploration, but I don't know as much as Gwen or Joe Mazumdar or
Yeah, yeah, yeah.
like there's specific expertise that each person has. Like I would say my expertise is, I don't want to say like market timing because it's kind of a bad word, but kind of technical analysis and really understanding the big picture and where we are in the cycle, and that, like those sort of things. Like I'm not trying to predict every wiggle, but I can give you a sense of, okay, well this is a good company, it's
When this,
outperforming,
yeah,
things
and
look
when's
good,
this,
and
yeah, and when the setup's coming, right? So,
yes.
yeah. So, what do you think this precious metals investors got to look forward to just in the next kind of quarter, kind of 6 months, or not look forward to?
Yeah, well, I mean, because I'm working on an article right now. It's interesting because a couple months ago, I looked at all the major breakouts in gold. There's been 6 since 1971, and 2 of the 6 came back and retested the breakout. Now it turns out that now I'm thinking today and yesterday, it turns out those 2 are when gold broke out to new all-time highs. So that's most similar to today. So that would imply that, we could come back to, I don't know, 2150. I know there's a gap at 2175. So it's very possible that we could do that. And there has to be, I mean, I'm considering all the macro, while I'm assessing the charts.
Yeah, yeah.
You really need to put it together. I mean, if you're, people who are predicting gold's going to skyrocket, and I've said the same thing. I think in the next 2 or 3 years, like there's a real chance we could see gold go to 4,000, 5,000. Like that setup is there. But at the same time, that implies we have to see a downturn. We have to see a downturn in the U.S. economy and the S&P 500. It doesn't have to be a crash, but we need to see a legit downturn for that to happen. So,
and I don't know
you
if
can
we,
at least,
yeah, I don't know if we want to see, $8,000, 10,000 gold, $10,000 gold, right? Like that's
right.
it's set up, but I don't think we like that outcome, right? Just generally speaking.
Yeah. So I think in thinking about the next quarter or so, I mean, we could see some weakness potentially. Thinking ahead, it probably depends on how fast the Fed has to cut rates.
Yeah. We've been waiting on that for a while though.
Yeah. I did see the Fed funds futures, I think, were raising the odds for September. So if the market thinks that they're going to cut rates and it's getting really close, like you'll probably see gold head back higher at that point. But at the same time, how weak the economy is. I mean, if it's just one rate cut and then they could wait like 3 or 4 months before if it's that kind of thing, where the economy's not really falling towards a recession, it's going to be tough for gold to get to 3,000 in that type of environment. And at the same time, silver won't do as well. Capital won't be flowing into juniors. But at the same time, on the other hand, if the Fed has to cut because the economy is heading towards a recession, that's exactly what gold needs. And that type of environment, then you will see gold, make a higher high, run towards 3,000, and so all of that. So I like to point out the different scenarios. So I'm not just here with like rubbing a crystal ball and trying to make an aggressive call. So, oh, gold's going to go to 5,000.
We don't last long. We don't last long in this industry doing that, brother.
Yeah. But the setup really is in place that if you get gold outperforming the stock market, and again, we're talking about what needs to happen for that to happen, you get that you get that cocktail happening for setting up. That can lead to a really spectacular run in the next few years. Yeah. But again, on the other hand, if the economy doesn't fall apart, it's going to take longer for that to happen.
Yep. No, I agree. Thanks so much for your time. That was awesome.
No, my pleasure.
I love talking stocks. Maybe we'll go offline sometime and talk names too. That'd be fun. Yeah. And see how we can make some money together, right?
Yeah, absolutely. That's what it's all about.
Yeah.
Helping people make money.
Yeah. Anyways, Jordan, thanks so much for joining us on the Kinvestor Report. And everyone check out dailygold.com, TheDailyGold.com. Free newsletter that can help with whatever you're looking for, and also his premium subscription service if you're willing to put out some of those shekels to get some better ROI on your money. If you haven't joined our network, please sign up and join and share with like-minded investors. And until next time, we'll chat again. Cheers.